Hello and welcome to Crosstalk, where all things are considered. I'm Peter Lavelle. Bitcoin, for some, it's the perfect marriage of technology and finance. For others, it's a get-rich scheme. Though no one can deny its market value is soaring and becoming an attractive alternative to the current global banking system. Is Bitcoin revolutionizing the world? Cross-talking Bitcoin, I'm joined by my guest, Mitch Feierstein in New York. He is a fund manager and author of the book Planet Ponzi. In Atlantic, we have Jeffrey Tucker. He is director of content for the Foundation for Economic Education. And in Cambridge, we cross to Garrick Heilman. He is a research fellow at the University of Cambridge. All right, gentlemen, crosstalk rules in effect. That means you can jump in anytime you want, and I always appreciate it. Garrick, let me go to you first in Cambridge. Explain what is going on with Bitcoin. I mean, I'm of the age, and I used to work in finance. I can remember the dot-com bubble and then its meltdown here. Not being very well versed in Bitcoin, what is going on here? Is this just speculation, or is this the new shiny, radiant future? Go ahead in Cambridge.
Right. Well, I think a little bit of both, to be honest. And certainly we've seen, some aspects of this story before, as you mentioned. After the dot-com bubble exploded in 2000, 2001, there were a number of winners that emerged from that era, and a number of new companies that were born after that have done quite well. Bitcoin has already been declared dead several times. In 2011, Wired wrote an article saying the rise and fall of Bitcoin. We saw the crash in 2014, yet it keeps coming back. So it wouldn't surprise me if we have another crash, maybe a few more in front of us. But it does seem that there's something important happening here with regards to the future of finance, the future of money.
Yeah, well, at least for a small number of people, they've become, at least, I guess, technically in the cloud somewhere, fabulously rich. It's really an amazing story. Jeffrey, I mean, Garrett called this, I think, in an article, a minor miracle. Would you use the word miracle here? Let me go to Jeffrey in Atlantic.
Yeah, I read that article, and I appreciate that term, actually. It kind of is. Nobody ever thought anything like this was possible before 2008, before the white paper of October 2008. We didn't really have the means to do what the blockchain does today. Just for background, the blockchain is the real underlying technology of Bitcoin and the real reason for its value. Bitcoin is just an expression of that technological value. And blockchain allows us to do something we've always wanted to do since the ancient world, but never had the ability to do it. But thanks to these distributed networks and cryptography, we can do it now.
Mitch, I guess Jeffrey kind of put it in succinctly for me, because I was in finance for a number of years, and there's always what's it backed up by? What are the assets? You always look at that, and then but what Jeffrey just said there kind of explains it. It's the technology is the safety. That's what's backing it up here. Do you buy that? Because you can say this is a scheme, it's a get rich, but I mean there's something to it, and people are making money here, and it makes everyone interested to get involved in it if you have the means. Go ahead, Mitch. How do you explain it all?
Well, I mean, we need perspective, I think. Bitcoin has come about in a time where the central banks, reckless central bank policy around the world has distorted every market, and too much credit, too much debt, and too much leverage have created instability in the financial markets. So we need to add perspective. So we need to look at risk versus reward with Bitcoin and the Bitcoin trade. So Bitcoin has gigantic volatility. You're seeing 30% moves either way in a day, or 40% moves. So it's not for the faint of heart. So, my perspective from an investor and being in the banking community internationally for 38 years, you look at the iconic figures like Jamie Dimon, who said it's a Ponzi scheme and it's going to zero.
Right.
He's totally wrong, but the establishment banks and the way that the fractional banking system works, people want to escape from that. People want to escape from the establishment. But what we've got going on here, just to be clear, is we've got inflation in every asset class. Stocks are trading at stratospheric valuations. Apple has a market cap eclipsing $1 trillion. Facebook at $600 billion. So if you look yesterday, if you look recently, you saw a pullback in the NASDAQ, the FANG stocks, Facebook, Apple, and all the technology issues. They lost $60 billion in market cap in a day, where the market cap of Bitcoin is around $160 billion. So on a relative basis, it's a much smaller move, and it's a very emerging market. So I think we've got to look at where we are, and it's an alternative asset class. I mean, you're looking at art. A Leonardo da Vinci painting traded at $450 million.
Right.
So, I mean, we need to put it into the proper historical perspective. Now, stocks are way overvalued, so are bonds, and so is property. So people are looking to get out of the dollar system, and I happen to agree you need to diversify, but I think you should also get some precious metals, gold and silver, which have been currencies for 6,000 years. The dollar is backed by fundamentally nothing.
Nothing. Okay, let me go back to Cambridge. I mean, there's a lot of people are saying that large investors are getting interested in Bitcoin. Is that distorting the price? Because they have the deep pockets at this price level to get into the market. Is there something behind that there? You know, because having been in finance, I mean, this is speculation. Okay, I mean, people are not buying on facts; they're buying on speculation right now. Go ahead, Garrett, in Cambridge.
Right. I think certainly the hedge funds, the big whales that are coming in, the billionaires we read about, are certainly influencing the price direction. But I think there's still a lot of money on the sidelines. I was at a hedge fund conference recently, and less than 20% of the funds in the room, and there were some pretty big funds in the room, have taken a step into this space. And I think the ones that have, a lot of them have done so as individuals rather than putting their funds in, because it's still very difficult to short Bitcoin.
Yep.
There's major counterparty risk. A lot of the exchanges, cryptocurrency exchanges, won't do things like reveal their financials, their audited financials to funds. So things that hedge funds are used to having in typical markets they trade in are not in place yet here, but they're coming. If CME, NASDAQ do come into the market with futures platforms, if things like ETFs and other things roll out, bring more regulation to the space, then I think you will see even more hedge funds come in, and the price, could go either way, frankly. I think the investment playing field has been a bit lopsided in favor of the bulls, and that could level. And a lot of the hedge fund guys aren't passionate about crypto, and frankly, they would probably, I think from a psychological perspective, prefer to make money if Bitcoin crashes on the way down than going up. That would certainly help them rationalize their lateness to the market.
Jeffrey, it's very interesting is that I think one of the interesting phenomena about Bitcoin is its lack of regulation, and going back what Mitch had to say here. And we have to remember this phenomenon came into being after the financial crisis of 2008, which the banks were responsible for. And so is this an element of that here? Because that the freedom of here, but go ahead, jump in, go ahead.
Yeah, no, there certainly is. I think of the success of Bitcoin is in part attributable to the fact that it has not been managed from the center. It's not been regulated, and that allows a lot of innovation and for people to try out things. You want to talk about market caps. You can talk about 150 billion for Bitcoin, but really you have to look at the whole class of crypto assets right now. And you're looking at, last I checked, it was about 350 billion once you include all the various tokenized blockchains that are out there, all the various Ethereum applications, the various altcoins, and we're just beginning to see these. We're going to see things coming up within the next year, like these Lightning networks that are going to be used for small transactions, that are going to fix the prevailing problems that exist in Bitcoin, which is that the networks are vastly clogged right now. It's very expensive to send and receive Bitcoin. It's growing so hard, so fast that it's almost become unusable just by itself for regular small transactions.
That's the reason
investors are looking for things like hedge funds.
Yeah, that's the reason why I never really got into it, because it's just not easy to move around. At least I'm not adept at doing those kind of things here. Mitch, a lot of other people are saying that this whole thing with Bitcoin, it's really just an investment. It's not really a mechanism to buy and sell. It is to park your money somewhere and leave it there because you don't trust the banks. I mean, for it to be really universal, you have to be able to use your wallet, as they call it, and buy things and sell things. It's not that easy to do. It's not widely accepted, although many more innovative people do say they accept it. Go ahead, Mitch.
Yeah, it's part of a diversification strategy where you'd have some Bitcoin and just sit on it and not worry about what your basis was, and whatever the losses are, you're going to eat the losses, and if you get a profit out of it, fine. But when you have that much volatility, I disagree that the big hedge funds will get involved in this when you have a 30% volatility swing each direction. So from peak to trough and back up again, down and up again. I mean, no investor wants to tolerate that kind of volatility, and how can you manage that kind of volatility becomes very difficult. So are the hedge funds and the banks going to jump in head first up at these levels? Probably not. If we get a bit more stability into these markets, you'll see more investment. But also, from that risk-reward perspective, you've also got to keep in mind that this is a non-regulated market. That's the attractiveness from people.
Right.
But governments have overreached, like we're seeing in the media right now. The deep state runs America. They're trying to rewrite history here with these statue wars, and that's always a dangerous time. So if too many people get on the Bitcoin train and get on the crypto train, the government could come in one day and say it's illegal in this country, we're cracking down on everybody. Because right now when you open up an account, they demand the KYC, know your customer information, and they will, when it becomes bigger, they will try to regulate it and they will try to control it. It's difficult for the government to let anything come out of its grasp. The Federal Reserve prints willy-nilly trillions and trillions of dollars since we went off the gold standard, backed by nothing. Now this is a Ponzi scheme. The government, that's what my book is about. The government debt globally is a Ponzi scheme. The governments can never repay this debt, and we're about to hit a wall. So should people invest in alternative asset classes? Absolutely. Is a Leonardo da Vinci painting worth $500 million? Is an apartment in Midtown Manhattan worth $600 million? I would argue no, it's not.
I would agree.
Tuition prices from when I went to university have gone up 2,000%.
Yep.
Where real wages since the 1980s are flat. Right. So how does that work out? When I got out of school, I could have bought a two-bedroom apartment on Park Avenue
let me jump in here.
$750,000.
Gentlemen, I have to go to a break, and after that short break, we'll continue our discussion on Bitcoin. Stay with RT. Welcome back to Crosstalk, where all things are considered. I'm Peter LaBelle. To remind you, we're discussing Bitcoin. Garrett, let me go back to you in Cambridge. While it is a fascinating concept, these cryptocurrencies, there is the concern of accountability. Illegal drugs, arms, and other kinds of illegal activity can stay under the radar of the authorities. I mean, I think that's a kind of a downside. Also, when people talk about it as being a new fiat currency one day, I mean, people are buying big-ticket items because they are avoiding taxation and things like that. So, I mean, it kind of cuts both ways here. I guess really the most important question will be if this kinds of cryptocurrencies are successful, what is the temptation of governments to step in to regulate it, and would regulation kill it? Go ahead.
Right. It's been very interesting to watch the migration of regulatory interest across this space. I mean, first we had law enforcement with the rise of the Silk Road and the online dark web, use of Bitcoin, taken interest in the sector. More recently, securities regulators, and with the upswing in prices, I'm sure tax authorities are kind of next in line to start getting involved. With regards to the law enforcement question, it's a double-edged sword for law enforcement, because on the one hand, these currencies do enable privacy on dark web transactions. But on the other hand, law enforcement, when they catch a criminal who's been using Bitcoin and they get a hold of their wallet software, they get effectively their books, and they may have a good chance of recovering some of the funds. And that's not something you get with a cash criminal where there isn't record keeping. So you can use the blockchain to prosecute cases, and that has been done. And law enforcement, I think, at least in some jurisdictions, is steadily becoming more open to seeing crime committed with blockchain technology. It does give them an advantage over cash crime.
Okay, it's a very transparent technology. That's an amazing plus for it. Jeffrey, earlier this week, there was a San Francisco judge putting pressure on a company that trades in these commodities and these currencies here. They want to see their books. They want to see names. They want to see transactions here. What kind of threat is that to Bitcoin, or can Bitcoin evolve with this kind of supervision and regulation from the outside? Because my sense is, and maybe you can correct me if I'm wrong, the people that started this whole thing don't like the state. They don't like authority. They really want to be on their own here. we're going to see an encroachment on this on these kinds of currencies and alternative financial mechanisms. Go ahead.
The regulation of the exchanges began in the spring of 2013. So far as I'm concerned, it was a disaster. We would have been much further along without these regulations. This is the main way the government can control Bitcoin. It's not actually controlling Bitcoin. What they're doing is controlling the traffic between national monies and crypto assets coming and going. They can control that. And the U.S. has some of the worst regulations in the world on crypto assets right now, on these exchanges.
Well, why is that? Jeffrey, why is that?
These markets are global.
Why is that? Why is that situation exist in the U.S.?
Well, because the regulators are trying to force a modern digital technology into an analog, old world style regulatory framework, and it's not working. And all it's doing is driving the innovation out of this country and to other places. You can buy Bitcoin much easier in a place like Israel than you can in the United States or in Brazil. I've been to exchanges all over the world. Most of them are very free and easy, and there's a lot of entrepreneurship there. In the U.S., it's all about command and control. It's a huge mistake for American regulators to be taking this direction because they're just going to drive the innovation and the capital outside the borders. Bitcoin and crypto assets in general are global technologies. They don't care about the nation state.
Okay, Mitch, address that issue there because, the almighty dollar, it's a threat to, Bitcoin and all these other things are a threat to the global domination of the dollar. It's obviously something the U.S. doesn't want to have happen.
Right. We're talking about U.S. dollar hegemony. And, my view is the days of U.S. dollar hegemony are very limited. Look, before the United States became the reserve currency, I think in 1913, when they created the Federal Reserve, which is a disaster that should be shuttered, the British sterling was the reserve currency of the world for 300 years. Now, was the United States responsible with the petrodollar and going off the gold standard in the Nixon era? I would argue no. I would argue that this has caused market distortion. I would argue that the central bank policies in the last 10 years have been more destructive than the good that they've provided, because I don't see that we've created growth for the trillions of dollars in debt that we've created. Now, as we saw in the last administration in Washington, big government is in right now. So our government is gargantuan, and they want overreach with everything in every part of people's lives in America. And to do that, if you get an iron fist on the banking system and make people take away cash, like one of the professors at Harvard wrote a book to get rid of all cash, make people put their money into the bank. This is a very dangerous thing. That's why people are migrating to other platforms. So we're at a point in time in history that could be very pivotal as to how we move forward with this. But the media is controlled, and if you look at regulation, they don't regulate companies like Amazon that dips their fingers into everything and every different business, or Facebook or Google that have become oligarchies. Right. And basically they're controlling the content that everybody sees. And this is where the regulatory agencies should be looking, not to control people's currency movements or whether they want to buy gold or invest a bit in Bitcoin. They should look at controlling the Facebooks, the Googles, and looking at news, the news entities, because news in this country has become opinion and political advocacy. Yeah. And this is a way for the liberal left to rewrite history, which is extremely dangerous. If we look, Mark Thompson, who ran BBC during the Jimmy Savile pedophile scandal, snuck out of London and came to run the New York Times. And people forget about history and where people are and how they move around, but the same establishment figures are running things. Well, 160 companies used to control the media, now it's down to 6.
Yeah. Gary, one of the things back in Cambridge, one of the things I find appealing about Bitcoin, and I can't say that I'm an expert on it by a long shot, it seems to promote entrepreneurship, which I think is a really good thing. Again, people that want to get out of the system, away from the system, away from regulation. Is it fair to say that these cryptocurrencies would be good for innovation?
I think absolutely. I don't think anyone doubts that. And I think actually, I think people can argue about how bad the regulation is. But in certain markets, there's been a very pro-cryptocurrency attitude because of the innovative aspects of it, and people are taking a much lighter touch in Switzerland, and in the UK even, and elsewhere, because of the amount of investment that's coming in, because of the faster, cheaper, better ways we can do things with this technology. And not just the technology itself, but also the new funding channels that are opening up. I mean, the ICO phenomenon, which we haven't really talked about, is on the one hand scary because there are some projects out there that clearly are fraudulent. But at the same time, you're also opening up access to early stage technology, to seed stage technology, to anyone around the world with an internet connection. This used to be something you had to be a rich VC to be able to do. Now, if you have a computer, have a little cryptocurrency, you can invest in early stage technology. That has a lot of risks, and it also has a lot of opportunities. It's personally, for me, I think, an exciting part of this story.
Mitch,
Yeah, I'm glad you brought that up.
Oh, okay. Jeffrey, go ahead, jump in.
Yeah, no, I'm glad you brought up this point about the ICO, because they've been kind of smeared in the financial press as being, just scams. And it's true, there's some rackets out there, but truth is that this is an amazing innovation. That it allows people to raise any business to raise money from anybody without using any financial intermediaries. I mean, the amount of innovation and capital that's going to unleash on the planet Earth is beyond belief. I mean, it's inconceivable what the ICO market could do to transform the nature of capital markets themselves over the next 10 years. Yeah.
Mitch, go ahead, jump in.
The issue with the ICO market, as I see it, it's an exciting market, but it's the wild, wild west in early days. And what's going to happen is the propaganda bullhorns of the media and advocates for the J.P. Morgans and the Goldmans who are being infringed upon when these offerings come out, and they're not going to get their fees. So what will happen is they'll make an example out of one that fails, like the media does. They'll have blow it up into a epic proportion. This is bad. You're going to get ripped off. Don't do this. Give us your money. Only invest through something that we vet for you. So yeah, there will be winners and losers, and you have to keep the perspective. Like I said at the beginning, there's perspective and risk and reward. And don't go out and mortgage your house and put everything into Bitcoin or an ICO. But look, you look at this as a portion of your portfolio and have a diversification in your portfolio. And when you go into a high-risk thing like an ICO, do your due diligence, do your own homework. And like I say in my book, don't ever invest in anything that you don't fully understand. If you don't fully understand it and you invest in it, then you deserve to lose what you lose. But if you give it your best, don't put all your money into it. Don't put all your eggs in one basket. Diversify, put a little bit into it. And if you take a loss on that and you make a profit somewhere else, then you can balance out. But your payout with some of these is going to be exponential, as we've witnessed before. The problem comes in when you try to harness the volatility.
Okay, Gary, let me go back to you, Cambridge, give you the last word here. What does Bitcoin and similar currencies, what do they have to do to create confidence in people that just see it as too risky? What maybe one or two steps they need to install?
Well, I think, similar to the mid to late 90s during the dot-com kind of run-up, we're in the infrastructure building phase for cryptocurrency and crypto assets. I mean, yesterday we had 3 major exchanges experience significant problems. 2 of those exchanges are going to be relied upon by CME for their futures market. That simply can't happen, on a regular basis like it does for this market to be taken seriously by institutions, to be trusted by a broader class of individuals. So more capital markets infrastructure is needed. The right balance of regulation is needed. And I think people absolutely need to understand that this is still very early stage, very volatile. I agree with the comments that have been made about only put into this what you can afford to lose, because it is still very high risk.
Okay, well, it's been an interesting ride. I'm sure we're going to see a lot more ahead. That's all the time we have, gentlemen. Many thanks to my guests in New York, Atlanta, and in Cambridge. And thanks to our viewers for watching us here at RT. See you next time. And remember, crosstalk rules.